Hello, chart enthusiasts, and welcome back to Explain the Charts. Today, August 7th, 2025, we're conducting an in-depth analysis of XAUUSD, gold spot against the US dollar, combining both recent news and extensive chart data. Let's begin by looking at the daily chart for XAUUSD, providing a comprehensive overview of its price action over the past year and beyond. From this macro perspective, we immediately observe a powerful bullish trend that has been consistently pushing gold to significant multi-month and even multi-year highs since late March 2024. This consistent upward trajectory highlights gold's enduring appeal as a store of value in the current economic climate. This impressive bullish momentum is underpinned by a robust blend of macroeconomic indicators and persistent geopolitical uncertainties. Analysts are heavily forecasting potential U.S. Federal Reserve rate cuts, which traditionally devalues the dollar and makes non-yielding gold more attractive. Coupled with this, we are seeing continued aggressive central bank buying globally, a strong vote of confidence in gold as a reserve asset. Significant ETF inflows are also contributing, indicating growing institutional and retail investor interest in gold. On the geopolitical front, the ongoing Iran-Israel conflict, along with the USA's involvement, firmly places gold in the spotlight as a crisis-driven safe haven asset. Furthermore, renewed U.S. tariff threats, particularly with speculation around China being next, add another layer of uncertainty, historically benefiting gold. Interestingly, equities have mostly shrugged off these tariff headlines, but the US dollar has shown considerable weakness recently, unwinding its July rally and providing a clear tailwind for gold's upward movement. It's important to acknowledge, however, that August is historically known as a challenging month for trading due to seasonal weakness, diminished market liquidity, and generally lower trading volumes, which could introduce some choppiness. While our latest daily chart data for August 6th shows XAUUSD closing around $3,370.24, real-time market news indicates the price is already pushing higher. Currently reported shy of the $3,400 mark at approximately $3,397.40, underscoring its immediate strength. Let's refine our view and zoom into the daily chart, specifically analyzing the aggressive bullish phase from early April 2025 through to our latest data on August 6th. What stands out is the undeniable sequence of higher highs and higher lows, illustrating a robust and well-defined uptrend. Notice the explosive moves, such as the period from April 9th, where price surged from below $3,000 to decisively break above $3,200. Another powerful leg up occurred in mid-April, propelling XAUUSD towards the significant $3,350 level, acting as a temporary high. Looking closer, key resistance levels were progressively overcome, initially around $2,980, then $3,150, and, crucially, the previous peak near $3,430 established on June 13th. These levels, once resistance, have often transformed into support after a successful breakout, demonstrating the market's conviction. The chart reveals a pattern of strong impulsive moves followed by constructive, often shallower, pullbacks. For instance, after the mid-May rally, price retreated to retest the $3,200 to $3,250 area, finding firm support and signaling sustained buying interest. Similarly, in February, the $2,800 level acted as a critical trampoline for the next leg higher. Analyzing volume, we can see that significant upward price movements are consistently accompanied by robust buying volume, validating the strength and conviction behind the rallies. The overall structure suggests that while minor corrections are part of a healthy trend, the underlying bullish sentiment remains dominant, with buyers eager to accumulate on any dips. Transitioning to the 1-hour chart now provides us with a closer look at the short-term fluctuations within this larger trend. From July 21st, we can clearly delineate an established upward channel, marked by consistent higher highs and higher lows on this shorter time frame. This indicates steady accumulation and bullish control throughout the trading day, despite any broader market noise. However, as we progress into the current period, especially during the first week of August, the hourly chart starts to show signs of increased volatility and consolidation around the $3,370 to $3,380 range. Notice the longer wicks on some candles, suggesting both buying and selling pressure are active, creating a more balanced tug-of-war between bulls and bears intraday. These short-term pullbacks, while appearing significant on the hourly scale, are likely healthy corrections or profit-taking activities within the context of the larger daily uptrend. Traders looking at this time frame should pay close attention to the formation of swing highs and lows, as breaking these levels can provide quick entry or exit signals. For the most immediate insights, let's scrutinize the 15-minute chart, covering the very recent hours of trading. Here, the minute details of price action unfold, revealing distinct intraday patterns. Observe how price frequently attempts to push higher, but often encounters swift resistance, resulting in candles with noticeable upper wicks, indicating a quick rejection by sellers. Conversely, any sharp dips are typically met with immediate buying interest, forming candles with prominent lower wicks, showcasing the underlying demand and support. The chart has largely been consolidating within a tight range, characterized by reduced volume in several periods, consistent with the August seasonality of lower liquidity. This choppy behavior is typical for intraday trading and highlights the importance of precise entry and exit points for short-term scalping strategies. Breakouts from these narrow 15-minute ranges, especially on increased volume, could signal strong short-term directional moves. Conversely, a lack of volume on attempted breakouts suggests a higher probability of false moves. Now, let's consolidate our findings into actionable insights for both bullish and bearish perspectives. Reasons to be bullish. The macroeconomic tailwinds are compelling. The anticipation of Fed rate cuts, strong global central bank buying, and growing ETF inflows collectively paint a very positive fundamental picture for gold. Furthermore, the current geopolitical landscape, with ongoing conflicts and renewed trade tensions, continues to bolster gold's role as the ultimate safe haven asset, driving consistent demand. Technically, the overarching daily trend is undeniably bullish, with consistent higher highs and higher lows demonstrating strong buyer conviction. The forecasted targets of $3,400 and the more ambitious $3,440 to $3,450 range appear highly plausible in the medium term, especially if bullish macro conditions persist. A decisive break and sustained close above the psychological $3,400 level would be a major bullish confirmation, likely triggering a fresh wave of buying interest and potentially attracting new long positions. Reasons to be bearish or cautious. While the long-term outlook is robust, short-term pullbacks and corrections are an inherent part of any healthy market trend and pose risks for short-term traders. The historical August seasonality for lower volumes and increased choppiness could lead to unexpected price swings or prolonged consolidation periods, making strong directional bets trickier. Should the US dollar manage an unexpected strong rebound, perhaps due to hawkish comments from the Federal Reserve or strong US economic data, gold's appeal could temporarily wane. A technical breakdown below the crucial $3,300 support, a level that has provided bounces multiple times in recent weeks, would be a strong bearish signal for the short term, indicating potential for a deeper correction towards $3,250 or even $3,200. For long-term investors, dips towards established support levels on the daily chart should be viewed as potential buying opportunities, leveraging the overall bullish trend. Short-term traders should prioritize strict risk management, using tight stop losses and looking for confirmed breakouts or rejections from intraday support and resistance levels on the 1-hour and 15-minute charts. To summarize our comprehensive analysis for XAUUSD, let's recap the critical price levels and future considerations. On the upside, the immediate resistance to watch is the June high around $3,433. With the next significant target being the market forecasted range of $3,440 to $3,450. A confirmed break and sustained close above $3,400 is the key gateway for further bullish momentum, and we assign a high likelihood, approximately 75%, for this to occur if Federal Reserve sentiment remains dovish and geopolitical tensions continue to simmer. Conversely, important support levels include the immediate $3,350 area, followed by the more robust $3,300 psychological support, which has proven resilient on previous tests. A clear break below $3,300 could open the door for a deeper correction towards the $3,250 to $3,200 zone. We place a moderate likelihood of around 35% on this scenario, especially if August's seasonal weakness combines with any unexpected dollar strength or easing tensions. Looking ahead, always keep a vigilant eye on macroeconomic news, particularly any statements or decisions from the Federal Reserve regarding interest rates, as these have a profound impact on gold. Closely monitor global trade relations, especially concerning any new tariff implementations, and track geopolitical developments as they can rapidly shift safe haven demand. Finally, successful trading relies on more than just price action. Observe trading volume for confirmation of trend strength, and always employ robust risk management with defined stop-loss and profit-taking points. Thank you for joining us on Explain the Charts for this deep dive into XAUUSD. If you found this analysis helpful, please like this video, share it with your fellow traders, and don't forget to subscribe to our channel for more valuable market insights.